So what does active passive investing mean to you, and how does that separate the opportunity of truly passively investing with you as a limited partner investor versus somebody that just says, oh, well, why would I work with Dan or any other manager and just go buy my own apartment complex for passive income?
Yeah, a great question. So what we mean by active passive investing means, like you said in the beginning of this interview, it's the jockey, not the horse. You have got to do your due diligence, and you have got to figure out if the people you are investing with are ethical people, if they have clear core values that align for you, if their system and processes are in place, how committed are they to their deals, what's their track record like, are you certain there's nothing fraudulent going on behind the scenes? That's the part I'm talking about. We're talking about active investors, and unfortunately, right now, when the, what do they say, when the tide is out, you see you swimming with their pants down. You're seeing a lot of syndicators who are doing a lot of shady things. Mm-hmm. And so that gets around quickly. And if you're doing shady stuff with people's money, it's called a Ponzi scheme. You're doing stuff that's illegal. You're going belly up, and you're likely going to jail. And so that's the part where it gives what we do potentially a bad name when it's such a beautiful asset class to be investing in. So that's the part where we say be active and do what you need to do. Ask the questions to build the trust. No question, no investor is gonna ask me a question where I'm gonna say I can't answer that. I'm not willing to give you that. And if you ask a question and they're not willing to give you something or not willing to tell you something, I'd walk. It's perfect. Yeah. Thank you for sharing that. You're not the right person for me. And you don't gotta be mean about it. You're just investigating. And so, and the other way to really build trust quickly is to get with somebody who's investing and who has had multiple success with the jockey or a sponsor, and then you can tag along that way.
Yeah. What are some of the key questions that investors should be asking sponsors to identify red flags or do the jockey test and really uncover, is this person somebody that's trustworthy, aligned, and mission driven, value driven, has the right team, has the right experience, and all those things that they can identify quickly, even if they're not necessarily super savvy in the real estate world? I'd
probably start high level with AI and just take the website and just ask anything that you can figure out about this company, just to see if there's anything that pulls up online. ChatGPT, tell me about Granite Tower, Zach Brady Group, what red flags have come up, anything in the media that I should be aware of. That's their big, like, okay, done. Beyond that, I'm asking for referrals of investors, ideally, send 3, 4, 5. There should be many. There should be countless people who are willing to pick up the phone for 15 minutes if you've done well for them. These investors are like, yo, you've tripled my money on this last deal. I'm happy to pick up phone calls for you. So there should be many referrals, immediately available. You should be able to go visit their assets. I'm going to go fly into Dallas. I want to see 3 or 4 of your assets. I'm not going to tell you I'm going to be there. This is the work part that can be a little bit like, oh my gosh, I'm going to do all that. So if you're like, I don't want to do all of that, I would just get on a Zoom call with them and get referrals, ask for their track record, ask for some of their financial statements on some of their assets. That's stuff that can be all done at home really easily. Then if you're still like on the fence and you're thinking of investing significant money, flying into their market and taking a look at some of their properties and meeting with them in person, all relevant, easy stuff to do that should be done to verify it and just give it time. We're working with a lot of family offices right now and looking at getting into some bigger checks, and they just move slow. Doesn't matter what you say, it doesn't matter your track record. They just don't make quick decisions quickly. And so I think it comes down to, emulating some of that stuff and just being diligent.
Yeah. Yeah, it's so fascinating to see, because we see behind the scenes of so many operators and different opportunities, whether we bring them on as a client or just meet them for the first time to see if they would be a good fit to be a client. But, some fund managers or syndicators, they, in the past 3 years, as you know, have been brutal in this business. It's been very challenging. You kind of see who has their pants down and who doesn't. But some of these, they're doing Ponzi schemes. They're raising more money to pay investors back, or they're just doing capital calls, or they just lose the money and then they're out in Jamaica or Cabo or wherever traveling, and they have their nice watches and they're flashing on social media, when over here they just lost people's money, which is insane to me. But you see all of that and you start to question, like, wow, it really is about the jockey. The horse is important. That's the vehicle. We know the vehicle's good. Real estate's an amazing vehicle, and it always will be. But it's the jockeys that are harder to find, those world-class, best-in-class jockeys. And then we have sponsors that they, instead of doing capital calls, they put 5 or 10 million of their own money from their own checking account into a deal to keep it going, to get the rents where they need to be, wait for the rates to drop a little bit so they can be in a good position. How many jockeys are actually willing to do that when it comes to the wire? Not many. And so it's so important to be able to do that due diligence, whether you're an investor looking to invest with a fund manager or syndicator, or whether you're an entrepreneur who's looking to bring people aboard your team. And just being able to uncover, that's what I'm working on honing my craft, is being able to uncover those values quickly and honestly, where you can really see through the BS and see the truth.
Yeah, I think that's gold. And it still may take some time, and you may come across a sponsor that has had some challenges. It's not necessarily a deal killer.
Right.
You know, like if you do 30, 40 deals, I mean, we're on deal 31. We've had a struggling deal. We've had a really bad deal. And we've learned a ton from that deal during this pullback. And there's some very clear principles that we've put in place. And I know from the pain we've gone through, it'll make us a better sponsor. It'll make us a better firm. It already has. Our firm today versus who we were back in 2022, you can even compare us as far as the team members we put in place and what we learned and systems and processes. So just because a deal didn't do well for one sponsor doesn't mean I could never invest with them. In fact, those are the types of people who if I'm investing now, I'm looking for someone who's had some great success, been through a recession, had a really struggling deal or two, and they're still here. Because the people that we're seeing leave right now are people that got wiped out in the last recession. I don't want to give my money to somebody who hasn't been through a recession, because when the recession hits, we see if they're going to survive. And if they don't survive, everything's gone.
Yeah. And on the questions is like, what are some of those failures? And just like you said, if you haven't been through failure, then how can I trust you? Because you might have just caught a good market and everybody can win in that market, but you don't have the team or the systems or the processes in place or the principles in place to be able to actually get through those hard times. And that's when it really shows who the real pros are and who are the wannabes.
Yeah, we work with a billionaire, and he says, do not only talk about your successes, guys. You're shooting yourself directly in the foot with these family offices. If you don't talk about the pain you've been through and that you're still here, he's like, they're going to write you off immediately. So the success is great. The pain, great. Use it. Dial yourself in and keep going. Just like in snowboarding, when you get an injury, you don't just quit and go home. You're like, damn, I got to make sure I never do that again. And you're better in the future for it. Same stuff, just bigger scale.